Despite defrauding the public of hundreds of millions of dollars and responsible for the 2008 financial crash, no one got arrested. That is The Big Short. Let's explain The Big Short like you're 5. Imagine a big neighborhood. Lots of people want houses. Banks are like kids with piggy banks full of money. The banks say, "We'll lend you money to buy a house. Pay us back a little bit every month." That's called a loan. There's 7 important steps. Step 1. Giving money to people who can't really pay. At first, banks only lend to people who are good at paying back. But then banks think, what if we lend to everyone, even people who don't have much money? So they give loans to people without jobs, people with very little money, people who already owe money. These are bad loans, but banks pretend they are good. Step 2. Hiding bad loans in big boxes. The banks take thousands of house loans and put them into big boxes. They say, "These boxes are safe. They're full of good loans." Other banks, investors, and even countries buy these boxes. But really, inside the boxes, some loans are good. Many loans are very bad. No one checks carefully. Step 3. The gold star stickers. There are teacher companies whose job is to say how safe the boxes are. Instead of being honest, they say, "A+, super safe, gold star." Why? Because the banks pay them to say that. So everyone trusts the boxes even more. Step 4. A few people look inside. A few smart people open the boxes and say, "Wait, these loans are terrible." They realize people will stop paying, houses will lose value, the whole system will break. They think, when this breaks, everything will fall down. Step 5. Making the fall down bet. They make a special bet that says, if people stop paying their loans, we get money. This bet is called shorting. It's like saying, "I bet this toy will break soon." Everyone else laughs. "Houses never break. You're silly." Step 6. The breaking. Then, people can't pay their loans. Banks take their houses. Too many houses are for sale. House prices drop. The boxes full of loans become worth almost nothing. Everything crashes. Step 7. Who wins and who loses? The bet people win because they were right. But families lose their homes. People lose jobs. The banks cause the mess, but regular people get hurt the most. Still confused? Let's break down how shorting works. Imagine a toy car. You tell your friend, "Can I borrow your toy car?" Your friend says yes. You sell the toy car to someone else for $10. But you promise your friend, "I'll give you a toy car back later." Now the trick. Later the toy car breaks and everyone says, "This toy is junk now." You buy the same toy for $1. You give it back to your friend. What happened? You sold it for $10. You bought it back for $1. You keep $9. That's shorting. In the movie, they borrowed the house boxes and bet they would become junk. But you might be thinking, why won't the banks punished? Banks were too big. If they failed, everything would stop. The government gave them money to survive, but no one was held accountable, for the regular people were left to foot the bill.